Good evening, Captain Retired Matt Edwards here with the next installment, the weekly installment of the Observation Post Facebook Live for the 2nd of March 2023. Now I'm kind of catching up with what I have in my numbered list here. I've only got 2 for tonight, so I've got a couple of pages of other stuff that I just haven't typed into the computer yet. So for now I'll probably do those 2 items, and I'll recap an idea I have about a possible course of action with respect to my not getting an admission from the government that they'll stick to about my injury on duty. Now, point number 213 in my numbered list. The Canadian Forces Superannuation Act, the Public Service Superannuation Act, and the RCMP Superannuation Act contributions and tax. Prime Minister Harper said that the employee would pay 50%, but the employee only claims 50% of the tax deduction when 100% of the contribution is earned in service. Now, an employer wouldn't probably have any reason to claim the share that they say they pay into a pension, except maybe as an expense, like a salary expense. But to say that the person, the employee, in air quotes, only paid half when they in fact earned it all, that means you lose on the pension contribution. Because when you contribute money to a pension, it is entirely deductible in the year you make the contribution. Now you pay tax on the whole thing when you take it out, but you end up paying tax on both the employee and employer share when you only get the tax deduction on the employee share. Do you see the problem? At least I see the problem. You ought to be able to claim, when you pay your contribution into a pension, the full amount of what you actually contributed. To say otherwise is insane. Now, it would take a fair bit of soul-searching on the government's part to admit that this actually happens, because the government claims that the Public Service, RCMP, and the Canadian Forces Superannuation Act pensions are a generous pension. And I can understand where they're coming from, because they're stuck in the past. In the past, pensions were viewed as a gratuitous thing. It was something the employee got given to them through the goodness of the employer's heart. Now that's the old way of looking at pensions. Before, it was looked at the way it really is that you earned it. So when you get a pension, you're not getting anything in addition to what you put in there. You're getting what you put in the bank, paid out, according to the formula, either in the law, the contract, or the trust agreement, because that's what governs pensions. Now, number 214, peace of mind insurance. Now, all insurance is really meant for peace of mind, but sometimes they make a distinction for like long-term disability insurance as a peace of mind insurance. Taxing this is insane. Less peace of mind by default. Not all long-term disability is taxed, so some are discriminated in law. Long-term disability is not an indemnity, which means a payment to compensate you for a loss. But if it was, it's taxed as income. It should be taxed as capital if it was an indemnity for loss. But what they're doing is they're taxing it as income instead of capital. So they seem to be mixed up about what the function of long-term disability insurance is. It is meant as a contingency type insurance, an event-based insurance, that if you buy the insurance and then the event that you insured against happens, then you get the insurance. Now that gives you peace of mind because you paid premiums so that you would have peace of mind if the worst happened. Now, some cases that I've read, the Great Western Railway case, Bradburn versus Great Western Railway, 1875. They said that the person who pays the premiums into an insurance plan is putting money away for a rainy day. They could spend the money on something else, anything that they feel like, but instead they pay insurance that might against the risk that might never happen. Now, when there was why I used the term peace of mind insurance is that was the term used in the Bryan Federal Court of Appeal case in 2014. So Bruce Bryan was a Ports Canada policeman. Now that was a plan, a federal government plan, called the Public Service Management Insurance Plan, PSMIP. Now in large measure, the PSMIP is the same as CFSA or Sun Life or the RCMP's Great West Life Plan. Now when he was taxed on this insurance, he went and appealed to CRA. They have an appeals division. They denied him, and then he went to tax court. Now when he appealed it to tax court, lo and behold, they ordered CRA to take it off his file, delete the T4A that was improperly submitted, which meant there was nothing to tax him on. Now, 3 years after that, they decided to send him more T4As. Now, that isn't that hard to imagine why, because really, the PSMIP is a federal government plan, and the federal government collects taxes. So they sent him a T4A and ignored the previous Tax Court of Canada decision. So he asked CRA to delete it again, because, I mean, he had won in tax court 3 years before. So CRA said no, he appealed, and then he went to tax court again, and he won before, so he won again. Now, when all of this shit happened, because they put him through a lot of abuse, because, I mean, he had to pay taxes on something that shouldn't have been taxed, and then they went and did it again. So he sued them for damages, and he got $500,000, $500,000 in punitive damage for breaching his peace of mind, because he had bought insurance for peace of mind. Now, he only owed $8,000, so when they appealed this to the next court, the Nova Scotia Court of Appeal, it was, or Federal Court of Appeal probably, it was knocked down to $60,000, which is still 7.5 times what he owed in taxes. So this is the thing, okay? The person who is disabled is being taxed because they're getting long-term disability insurance, not income. And the government is ignoring the fact that they only get the insurance because they can't work. If you can work, you don't get long-term disability insurance. It's that simple. Now, the government has made it complicated by bringing in technical legal rules. One of the rules is that if you only paid a part of the premium and the employer paid part of the premium, then it's taxable. But if you paid all of the insurance, then it is not taxable. Now that brings me back to the point in the previous point. If the government pays 85% of the premium for the CFSA, Great West Life, Sun Life, and the Public Service Management Insurance Plans, that money was earned by the person, the employee, the member, or the manager, and it was only paid as a technicality. The person could have paid it all themselves because it was their earnings. But because of that technicality, they're taxing the person on the money they receive, which is not being paid in relation to the work the person did, the service the person provided. It's being paid in relation to the premium that was paid. So you pay the premium, and the premium is split up of two parts. One is paid directly from the employee or the member, directly deducted from payroll. The other one is paid on the employee or the member's behalf by the employer. It is not paid by the employer for its own coverage. Now, I'm not a lawyer, I keep telling people, but I read, so I can tell you about the 1969 case in which the argument in England, I can't remember the name right off the tip, it's not coming out, but the lawsuit, the person got damages and he was getting a disability pension. Now, when the person who had to pay the damages said, you know, we want to reduce our damages because the person is getting a pension, a disablement pension, and you know what? He never paid any money as a contribution towards that pension, so he is getting it gratuitously, so therefore we ought to be able to take it into account. Now, the judges in England rightly said, you know, why should the person be penalized if he gets paid, you know, if his service ends up with the employer, you know, making the contribution for him? Why should they get paid? Why should that person be penalized if that's the case? Because his service has value, and because of the person's service, the contribution was made on his behalf. So therefore, he did make the contribution, and therefore you can't touch his pension and claw back the amount of the pension from the damages. See? Now that case was reinforced in a 2013 case in Canada. IBM versus Waterman had the exact same thing. They fired the guy unjustly. He sued and won. Now they argue because they paid 100% of the contributions towards the defined benefit pension, then they should be able to deduct the value of their payment from the damages for firing him unjustly. The judges said, relying on the case I told you about just a few seconds ago, they said the person's time has value, which no one can deny. See, no one can say that your time doesn't have value. So because the person served the employer and the employer chose to make a contribution, 100% in this case, towards the pension, then it was made on his behalf, and therefore they couldn't deduct it from the damages for wrongful dismissal. You see how it all works? Now, how come the government isn't, you know, they are aware, I presume, of these cases, but they choose to ignore them. So they rely on the technicality that the employer paid the insurance premium, like in the service income support insurance plan. Well, that's not the way CRA looked at it in the 2002 Université de Laval Federal Court of Appeal case. And they said to the university, well, we know that Manulife made the payment, but we think you really made the payment, even though they physically made it. It really came from you. Now, based on that, they can't very well argue that the payment comes from Manulife, but it's really from Manulife when it really comes from the employer, just like in the Université de Laval case. And a year later, the National Bank of Canada had the exact same thing happen. And this is the second case that, you know, it goes against what the government wants to do for the payment of the premiums. But for the payment of the insurance, they want to say it's different. Well, I'm sorry, they can't have their cake and eat it too. They're not allowed to do that. That's just unfair. You can't say that this is the way it is when we want it to be, but that's the way it is when we want it to be too. Like, you got to give someone a side to argue, a position. You know, you can't very well say that who physically made the payment of the premium is important if the payment of the actual insurance, the physical payment, is not important. Because that's what they said in both of those cases. Now, I think I've labored on enough on that. Hopefully people see the issues. Now, what I was doing is, I'll show you the page I'm working on. I wrote down a few jot notes. And I'm thinking about doing, it's hard, you won't be able to read it or whatever it is, but I made some notes there while I was watching TV earlier. So I'm thinking about doing a letter to Minister of Veterans Affairs, my colleague, and I'm thinking about going through my Member of Parliament. First, I want to make sure that my Member of Parliament staff understands where I'm coming from and that they agree with me, okay? Because they aren't going to send a letter and endorse my letter if they disagree with my position. Now, what it's about, if I do it, will be about my injury in service and the fact that it hasn't been acknowledged. Well, it was, but they took it back both times. So the first point I said is to stress the integration of CFSA with the Veterans Affairs program. So in 2006, when the new Veterans Charter came into effect, the Government of Canada sat down, the Department of Veterans Affairs, the Department of National Defence, and CFSA Financial Services, which is a branch of the Department of National Defence. So these three bozos sat down and negotiated what's called the program arrangement. For the program arrangement, they said that in the case of a medical discharge, a medical release, if someone becomes disabled, whether it's in service or not in service, they said in Section 3.1.2 that Service Income Support Insurance Plan Financial Services will be the first provider of income replacement. Now, this is obviously a cost savings measure. Okay, so they didn't want to pay CFSA at the same time as they were paying the earnings loss benefit. And Veterans Affairs wanted to cut off their costs, so they said the Department of National Defense Insurance would be the first payer. Then VAC would only pay if they had to. Okay, so that's my first point. I'll put that in my letter. I'll put a few words around it. But basically, they agreed that CFSA would pay first. So CFSA is very important. Now, the fact is, CFSA is Manulife, but they are the agent for the principal, which is the Government of Canada, the Department of National Defence. Now, that was determined in the Manus Federal Court 2012 case. The government was said to be commercial partners with Manulife. Now, my second point is that CFSA, Manulife, they certified that I was hurt in service because the insurance policy, it states in Section 41A3 that a reservist has to be hurt in service or they don't get their long-term disability insurance. Now, that caused me not to get my insurance for about a year after I got out, a year and a half after I got out of service, medical release, 19th of January 2012. Never got my CFSA until March of 2013. Now, the next thing I put there in my notes here is that Veterans Affairs Canada, because I wasn't getting CFSA, I went and applied for earnings loss benefit. So when I applied, they approved me for the rehabilitation program on the 13th of November 2012, and they said I was hurt in service, and they listed 5 medical conditions: vertigo, depression, anxiety. Anyway, there was 5 medical conditions that they said that was caused by my service. They put me in the rehabilitation program, but they never actually paid me the earnings loss benefit. And 6 or 7 months after, back in July of 2013, they said, you know, you're not participating in the rehabilitation program, so we're kicking you off it. So that's a bit more complicated, but the fact is, well, they said I was hurt in service, and so did the Department of National Defence. So I have 2 departments that said I was injured in service. Now, the next point I got down here is that the Martin Supreme Court of Canada case in 2003 said that belonging to an institution is a benefit. Now, when I was booted off of the rehabilitation program, I was booted out of VAC, and therefore they weren't following the common law because I lost that benefit. If I had been in the Department of Veterans Affairs program, it would have made a major difference in how I was treated, because in 2015, the government decided to pay reservists more money because they changed the earnings loss benefit formula. Before that, it was 70% of a deemed $2,000. But after that, it became 75% of a deemed $2,700. And then in 2015, they decided to get rid of that and just say that it depended on your rank. And depending on your rank, if you're regular or reserve force, you would get 75% of your rank-based pay. Now, because I wasn't in the system, I didn't get that increase. I just continued to get the service income support insurance plans, 70%, 75% of the deemed $2,700. You see? So that was something I missed out on because of their stupidity. Then in 2016, in October of 2016, had I been in the system, I would have gotten that increase from 75 to 90%. But because they left me out of the institution, I was shit out of luck. Okay? Now that ain't fair. Now the next thing I said is the Canada Gazette in 2015. And I'm going to link all this together with narrative, prose. But the Canada Gazette in 2015, that was when they said they were going to change the way they paid reservists and regular force disabled and service individuals. They said it simply wasn't fair to have one level of compensation for someone who was regular force and one level of compensation for someone who was reserve force. Now, you shouldn't have to make that statement in this day and age. That is basically a human rights issue. So for years and years, the government has been getting away with a human rights problem, and they were paying a disabled and service individual who was a reservist differently than a person who was regular force. You can't do that. You just can't justify that in a free and democratic society. How are you going to attract people to the military if you have that kind of baggage, right? You're not supposed to treat people unfairly. Now, geez, I can't even read my writing sometimes. Oh, I got income replacement benefit equals compensation for injury, but CFSA pays a regular force person, a regular force veteran, regardless of whether or not they were hurt in service. Now, you can't do that, okay? You can't say, I mean, they are doing it, so, people are saying, how can you say they're not doing it, Matt, when they're doing it? You shouldn't be doing it. You shouldn't have different conditions for payment for the service income support insurance plan or the income replacement benefit, because both of those are supposed to be a compensation for your injury in military service. Having the link to service is entirely okay, in my opinion. That's the way the Pension Act was. That's the way it should be for the new Veterans Charter. You shouldn't pay people just because they got hurt. Well, actually, I'm getting ahead of myself, because I actually have a program, a policy suggestion for the government. In order to attract and retain new soldiers, I think they should get rid of the service connection. Because if you got hurt off duty or on duty, you were still placing your life on the line for Canada, because you're 24/7 ready to be called up or, go to war. So they should get rid of the service connection, in my opinion, and therefore it's a much better, peace of mind, okay? Because do you recall the story of the captain who lost her leg in an accident reporting to duty to go to Afghanistan or something, and then they said she wasn't on duty because she was bringing her child to daycare or something, and therefore technically she wasn't on duty. See, if my policy suggestion was accepted, there wouldn't be a fight. They would have paid her compensation regardless. Now, that's nothing new, by the way. If you're in a war zone, called a special duty area, then you have that kind of protection. Only when you're not in what's called a special duty area do they try to link your injury to service. You could have just had a normal heart attack, but if you were in a theater of war, that would be compensatable. That's the way the system is. Now, they don't want to change it, I'm sure, because, it would end up costing them more money. Like, here's the way I think it should be. The service income support insurance plan pays regardless of injury in service or not. So that's always should be payable. But if you get injured on duty, you should get the service income support insurance plan because you paid for it. But you also should get the income replacement benefit regardless of the rate whether it's 75% or whether it's 90% or 150% or 1,000,000%. That's your compensation for your injury in service. Now, the payment of the service income support insurance plan is the payment in relation to the premium you paid. Now, remember I said the program arrangement, section 3.1.2, that is totally unfair. That is because they are leveraging, they are stealing the premium-based insurance that the soldier paid for, and they're using that as the first payer, which means they're basically getting off scot-free and not paying compensation for injury. Now, to some of them, that makes sense, because to some of those assholes, they think that if you get both, you're getting paid twice. Now, everybody knows you can't get paid twice for the same thing. If you go to work or you go serve in the military, you're not going to get paid twice for the same time period. That's just not fair. But the money you get paid, it depends on the character of the money. If you put money into a pension and you get the money back, that's your property getting returned to you. So if somebody is paying you insurance, they can't take your property that's being returned to you into account, but they do. Both the Service Income Support Insurance Plan under Section 24BA of the policy and the Veterans Wellbeing Act regulation, Section 22A, they take your property into account to reduce the payment of compensation for a military injury. Now, is that supported by the courts? No. In the common law, pensions are not allowed to be used to reduce a person's damages. Remember IBM versus Waterman I told you about? That was that very same thing. So what the government is doing, and I think I'll shut up, my eyes are going blurry, but what the government is doing is trying to get around the law. They're trying to get around the common law, because that's where these kind of cases, damages, goes. It don't go before the government. It goes before a judge who practices law in the common law, and it goes by precedent. And all of those cases, like Bradburn, 1875, Cunningham versus Wheeler, 1994, Supreme Court of Canada, Ratch versus Bloomer, 1990, Supreme Court of Canada, all these cases are supposed to be the precedent that people know about. So in all of those cases, you can't use a person's Canada pension plan or a pension or EI or other forms of non-indemnity payments to reduce an indemnity award that's meant to make a person whole after they have been injured by another person. Because you're giving the person who injured the victim an advantage over the person they put in a wheelchair. Now, that's not hard to understand, is it? So why is the government doing it? Well, to save money. But they might try to rely on legal principles, and they might try to say, well, you know, under the principle of compensation in the common law, a person is not allowed to get more than 100% of what they're owed. Well, that brings up a couple of issues. Who determines what is payable as compensation for injury? A judge does. Now, does the judge have to take into account every claim made by the victim or every clawback claimed by the insurance? No. The judge takes it into account, the various factors in the law, and makes a judgment based on precedent whether or not they can do it. If a claim is too ridiculous, he says it's too remote. You know, if a person tried to claim the moon when they got injured, they'd say this claim is too remote to be considered. I am not going to include this in your damages. Basically, it's telling them to take a flying fucking leap. Now, on the other hand, the people who have to pay the money, which is usually insurance, hardly anybody pays damages out of their own pocket. They can't afford it. That's why the government requires people to have insurance to drive a car. Because if you didn't have the wherewithal to pay damages, then, you know, the person you injured won't have any, they're going to have to rely on the government. So the government makes people buy insurance for the liability of the risk. That's why cars have insurance. That's why property owners have insurance, house insurance and stuff. It's for peace of mind again. Now, on that note, I'll hopefully go back to writing down my points that I have on, paper, and then I can wax on about those. But for now, I only had 2 issues there, which, well, I was hoping to catch up eventually, so I would never have new issues popping into my head. But that's not going to happen. Like the thing I was talking about with Income Tax Action 61F, that's the one about the taxation of long-term disability that I mentioned in section 214, point number 214 when I was talking. Well, it's convenient for them to ignore the fact that, reality is that the employee earns many things that aren't included on a T4 or T4A or whatever. But we need consistency. So if the government had not said in the case against University of Laval and National Bank of Canada, if they had said, well, we say that the premium being paid by the employer is a crucial factor. So therefore, the payment of the insurance by the insurance company is a crucial factor. So we're not going to allege that the employer is really the person who made the payment. We're going to use the exact same set rationale. And therefore, don't you bother about the employment insurance premiums that we would like to get. Because that was what the issue was. CRA didn't take them to court about taxes. CRA collects employment insurance premiums for Service Canada, and they collect CPP contributions for Service Canada, CPP as well. So they were taking those employers to court to try to get the employment insurance premiums because they said that the person that was disabled and unable to work was getting income from their source of employment. Now, if you get paid from the employer, then according to the government, you had to pay tax, EI, and CPP. The problem with that is you're not getting paid from the employer for your service because you're too disabled to serve. You're getting paid an insurance payment because you bought a plan from your employer. So the way I put it is the employer has 2 hats on. The employer has an employer hat when you're serving the employer, and the employer has an insurance hat on if the person becomes too disabled to serve the employer, but they bought a plan from the employer, and therefore they're entitled to the insurance even though they don't have to serve to get it. See? So what CRA should have done back then is not taken those 2 employers to task. That's what I think, because why would you want to take employment insurance premiums out of someone who's getting money but can't serve an employer? And the purpose of the employment insurance is to give you an employment insurance payment if you can't serve your employer because of layoff or something. It's insane. So theoretically, you could get insurance from your insurance. You could get your stamps from CFSA and then put in a claim for employment insurance. But you know something? CFSA, Manulife, the Department of National Defense, is not deducting employment insurance premiums out despite those 2 court cases that I mentioned. This is one of the reasons why I think none of this is coming to light. Because there's a pretty big liability for all the years that they have been doing it wrong, according to CRA. They're not doing it wrong according to Matt Edwards, Captain Retired, because the employment insurance never should have been taken out, shouldn't be an issue, because the person is unable to work. You had to be ready, willing, and able to work in order to get employment insurance. Now, that's in general. Now they have a sickness employment insurance, but the old rules, the general principle, is you had to be willing to work and able to work, which a person who's disabled isn't able to work. I mean, it's crazy. Anyway, on that note, I shall call it quits, and thanks for watching. I'll see you next week.